So Austin, you're a syndicator in Los Angeles. You've been in business now for what, 10, 15 years?
Yep. Um, I started in 2017, actually. I started Keystone Investors, real estate private equity firm based in Los Angeles, with the goal of connecting private individuals with interesting private real estate deals that they wouldn't otherwise have access to.
Got it. Now, we've done a little business together, so, I recall we've done some transactions near to West Los Angeles, but it's a little more further east along like the 10 corridor, like it's well known as within the industry as sort of the mid-cities area.
Mm-hmm.
Again, for those that are not, specific to this area, that's just a little east of the West LA, but west of downtown Los Angeles and the 10 corridor. Um, Tell me a little bit about like, how do you differentiate yourself? What are you looking to, accomplish, with your sort of philosophy?
Yeah, my thesis early on was called urban nodes, which is neighborhoods that have a cool residential feel. They're walkable. You can get to the new coffee shop. You can walk to the grocery store, but you can get to the downtown where the entertainment and jobs are in less than 20 minutes.
Okay.
So that's how I started circling this area, Mid City, West Adams, because if you're a renter there, you can get to your office in Century City, Culver City, downtown, Santa Monica, Mid Wilshire, Hollywood, all in less than 20 minutes. While your
Right.
neighborhood is very walkable, low density. Um, and so I really like that dynamic. If a tenant loses their job in Culver City, they can get a new one in downtown and not move from your apartment.
So
Whereas
you
you,
wanted
you,
to find an area that had an element of stability,
mhm.
but was also catering to, is it fair to say that you're catering to the population being a younger professional mix?
Yeah, typically renters are a younger group. But in Los Angeles, people rent into their 30s. And
Right.
that was part of my thesis as well when I wanted to get into the apartment business.
Mhm.
And part of the reason I chose Los Angeles is, the average home price is over $1 million. So you end up having people who rent for much longer. I rent. Um, so you're getting tenants who are in their 30s,
Got
often
it.
late 20s, early 30s. They have a lot of work experience, a lot of rental experience, a lot of rental history, excuse me. So,
And that's a
um,
big demographic too. So you've got a huge amount of demand. We still have another decade of onboarding, I don't even know what generation that is. Where is that, Y, Z or whatnot? But there's still a huge bubble in that space.
huge. I mean, if you're doing apartments in Kansas City, people are buying their first home at age 25, and then you've lost them as a customer.
Right.
So, there's just a much deeper rental market in Los Angeles.
You said something there. You said, I chose Los Angeles. So take me back a little beyond that. I don't really know that. What's your sort of origin? Where are you from? What did you do before you were doing this?
Yeah, I'm actually from Pittsburgh,
Oh shit.
originally.
No kidding.
Yeah, I started flipping cars when I was 16. That was kind of my first foray into business.
No
And
way.
I'd buy a car for $1,000. I'd put 500 into it and sell it for 3,000. And that was really that's when I had an aha moment about business, which is, many people think, okay, if you buy something for 1,000 and you invest 500 in it, it's worth $1,500, right?
Right.
That's not true. You know, if you buy something for 1,000 and you invest 500, it can be worth, you know, assuming everything stays equal in the market, that could be worth $2,000 or $3,000.
Right.
And that's something that I was able to learn early, which, you know, it's not intuitive. Um, and sometimes people learn that later in their career. A lot of people never really learn that, you know, it's kind of the capitalism.
Right.
Um, and so, you know, part of the reason for that is you're taking risk to invest that $500. Many things could go wrong. The market could move against you. People may
You're
not
trying to create some
want those
value.
kind of cars in a couple by the time it takes you to do that $500 worth of work. Um, and so, you know, I basically took that philosophy and started applying it to real estate. And it's the same concept. You
Mhm.
can buy something for $1 million and you can invest 500,000 into it, and it can be worth not 1.5 million, but 2 or 3,
Right.
assuming market conditions don't change.
Right.
Um,
That's an interesting segue into today. All right,
right.
great. So, all right, so you were in Pittsburgh. Did you go to where you go to school out here, or what brought you out here?
Yeah. So, yeah, I grew up in Pittsburgh. I went to school in Boston. I went to Boston College,
Wow.
studied finance there.
Okay.
And then I worked on Wall Street in New York in investment banking. I was covering real estate investment trusts, actually REITs,
Okay.
publicly traded real estate companies.
Oh.
And there I had kind of a realization that, okay, yes, individuals can anyone can buy an apartment REIT stock and technically have exposure to real estate,
Mm-hmm.
but those companies are so big and they're generally buying just stabilized apartment buildings
Mm-hmm.
in major markets. And
Mm-hmm.
so those stocks end up tracking the larger stock market pretty closely. So, yes, you're getting exposure to real estate, but you're more getting exposure to, you know, just macro trends.
Right.
And so, for an investor to get exposure to real estate, you know, the benefit of real estate, trying to buy something for 1 million, invest in it, increase the value, and generate that return,
Right.
you you have to find a private individual. You have to find a real estate private equity firm.
Right.
Um, and that's kind of what clicked for me is, yes, people can access publicly traded REITs.
Right.
But I wanted to provide access in small chunks, you know, starting at
Right.
50, $25,000, even less when I was starting,
Wow.
um, to real private real estate, to interesting deals rather than just a stock ticker.
Right.
Um,
Right.
so that's what kind of sparked this idea of creating a real estate private equity firm
That's
was
cool.
was
And how
working on
long
Wall
ago
Street.
was that? Again, that's about 10 years ago.
Yeah, about 10 years ago, I was in New York, doing that.
All right. So you come out here, you kind of like you start developing this thesis of you're gonna add value to,
Mhm.
real estate deals and try and do what you were doing to motorcycles and trucks and whatnot. And so walk me through that first deal. How did that go down?
Yeah, so you know, I came out to Los Angeles because one of my clients when I was on Wall Street was um, a big private equity firm,
Okay.
located out here in Los Angeles. And so I kind of came out here, and developer as well. And
Mm-hmm.
so, you know, I was much closer to the real estate, you know, actually
Okay.
buying the real estate and developing. Um, and, you know, I started seeing what was happening in Los Angeles.
Right.
And I decided to do my first deal on the side while I was still working at the private equity firm.
Uh,
And so I raised about 400,000 from friends and family.
hmm.
You know, these are friends I'd been talking to for years and years. You know, someday I'm going to buy a piece of real estate, and some friends would look at me and say, Yeah, I wouldn't be interested in that, but I'd have some friends that would say, whenever you do that, let me know.
Mm-hmm.
And so I kind of remembered those people
Right,
who seemed interested. So the
right,
capital raise was not that hard because I had a lot of people in my Rolodex who had told me, if you ever do something like this, let me know.
that's
And
cool.
so I kind of reached out to those people, their first couple years into, investment banking or their consulting jobs. And, they got their first or second bonus. And they would put 15, 20, $25,000 with me. And so I used that pool of money to buy, 4-unit property in Los Angeles, 4-unit building. Um, and I turned one of the 4 units, marked
Mhm.
the rent up to market rate, and then sold the building within a year for a 30% return for investors. And
Nice.
so that really kicked off the business. It really showed a lot of investors. I had 20 investors in that deal that,
Right,
hey, they had that aha moment. Oh, wow,
right.
this really
This
works.
worked, right.
Yeah.
That's not a bad return on your first deal too.
Yeah.
They say that your first deal is kind of the most important one. It sets the tone.
Yeah. I remember talking to mentors and, how do I get this real estate private equity business off the ground? And they would say, it comes down to your first deal. You have to, you have to hit it out of the park on your first deal. That's what gets the momentum going, which is very difficult to do because your first deal, you don't know much, you
Yeah,
know.
right. Your learning curve is huge and the pressure's totally on. So that's insightful that the reality is you probably have the least amount of knowledge, the most amount of motivation, and that can be a dangerous combination, wanting to make it happen at the same time not having the.
That's when a little luck kicks in.
What's that? Yeah,
That's when a
look,
little luck kicks in.
yeah, well, look, that's all good. It's all good. So, all right, so that's your first deal you've done. How many have you since that time?
Yeah, 23 deals now.
Wow, that's fantastic. So it's taking on it sounds like it's really taking on a life of its own.
Yeah, yeah, it really has. Yeah, it's
Cool.
been an awesome journey.
Um, uh, what do you see happening in the world right now? Like, okay, so 10 years ago, again, from a context standpoint, we have the real estate market was crawling out of had meaningfully crawled out of the last recession, right? So we have got this big great recession in 2008, 2009, 10. Unfortunately, I was all here and doing what I'm doing, and we watched the market kind of come back around. About that time, interest rates are just rock star low. We see Chase come to the market offering 3.5%, 5-year money. Some of it, interest only. Cap rates are at 5.5% in 2012, 2013. So there's a 2 basis point, um, you know, on generally speaking, the west side and some of the markets you're in, right? So we've got a radical a growth story that we're coming into, and and we grow and we go through this, and now we've seen a big change in the market, right? We've got interest rates trending around 7% or 6% right now. Around 6% right now. We've got cap rates trending at around what 5, 6% at this point.
Yeah.
We've had stagnant rents, for a couple of years, and vacancy. Would you say vacancy's gone up?
I will say it takes much longer to lease an apartment. That deal I was telling you about, that was 2018.
Okay.
We had that unit leased in 2 weeks. And
Yeah.
we did, and so now it takes months to lease an apartment. That's just how you have to underwrite.
Right.
Part of the reason is we went through a 4-year eviction moratorium and rent freeze.
Yep.
And evictions are still difficult in Los Angeles. It's a very difficult process. So it puts you at a lot of risk if you have an 8-unit building and you have one tenant who doesn't pay. You've lost a meaningful portion of your income and and it's very difficult to evict. So you're at some risk there. Therefore, when you're screening for applications, you have to be very, very strict on, um, you know, you have to meet the prospective, resident. You have to, you have to check all the boxes, before, when there's certainty around evictions, you can take chances on, potential renters.
Right.
When your entire, business model is at risk, if a couple people stop paying, that starts to impact the other tenants because you don't have the capital to make necessary repairs, um, to pay the taxes. You could lose the building to the bank. And so you just need to screen harder, and therefore it takes longer to find someone.
Right, because the cost of making a mistake is a lot greater than it used to be.
Yeah, I remember looking at deals in Utah, right? And their eviction process is if someone doesn't pay, you're able to get the unit back within that month.
Oh my
And
Lord.
so their screening process is $200 for a security deposit, and you got to have credit over 550 or 600,
That's an
and
interesting,
that's it.
that's an interesting contrast to what's happening in Los Angeles. And, it'd be, we could riff on it a little bit. Right now we're in a period where the government oversight seems to just be on, they seem to be having a bit of a party, and we've seen increasing regulation and controls. And and so I guess the open-ended question from you is like, from a operator standpoint, how does that change your perspective on Los Angeles? And what does that mean? Uh, what does it mean for you when the government, meaning the city of Los Angeles, is instilling greater controls over what you can do or cannot do with tenants, and evictions and relocations, and even the right to raise rent and whatnot. So how's that affecting your business and your thesis?
Yeah, I mean, it just means the buildings are worth less, you know. Before these stringent regulations, interest rates play a major impact as well, but pricing for buildings is down about 40%. Depending on where you are, it can be 20% to 50% declines in value in Los Angeles. And a lot of that has to do with, um, these regulations that have come in, that have been very stringent. I mean, and when you're looking at new properties, you just have to account for the fact that it takes longer to lease an apartment, and you have to account for, um, the fact that if there is an eviction, it will take longer to process. Now, I've had almost no evictions, by the way. And that's because you just need to be very careful when screening. And so we've rarely had to go through that process. Um, whereas in another market, like I mentioned, Utah, for example, because I've looked at deals there before, they may actually have more evictions because they're able to accept really, any tenant. They have a much, smaller tenant base as well because houses are cheaper, and so people buy. Like I was saying before, by the time
So
people
the
turn 20.
population's not, their guidelines and their rules don't affect as many people negatively, because the affordability of the whole region allows for more home ownership versus tenancies.
Yeah.
Interesting, right. Well, So, okay, so then what you're suggesting that the apartment valuations have gone down um, in addition to interest rates having had an effect on valuations. Your suggestion is essentially that the regulation is also has had a huge cooling effect, and I don't disagree with you, by the way, but has had a huge cooling effect on property valuations.
Right.
And so, from that standpoint, we could go in a couple of directions. I mean, um, where do you think the city goes from here? And how does that affect your outlook on, you know, your business plan moving forward?
Yeah, look, I think that there's been some light shined on the, the incompetence of the leadership that we have in Los Angeles.
Yeah,
People are
that's
starting to wake
probably
up and see it.
right.
So I tend to think these types of things are pendulums.
Mhm.
And there may be a swing back to sanity. Another thing that has a big impact is just public safety, and you see a lot of encampments and graffiti around. And these are simple fixes for the city. Not simple, but it it
Not
it
simple.
takes someone with it takes someone with real competence to come in and you know show leadership and make actual changes. Make the metros safe for people to ride on. That saves people their car expense if they feel safe riding the metro. Just simple things like that, and then people feeling safe walking up and down the street. Um, these are addressable issues,
Mhm.
and Los Angeles is the greatest place. I'd argue, I'm biased, but I'd argue in the world to live. Like, we have the best climate. We have a very dynamic, diverse population. We have a ton of human capital talent.
Right.
People are very smart here and very entrepreneurial. And if you had a leadership change, I believe that you would see a boom in Los Angeles. I remember when
I mean, we
go
were
ahead.
kind of there. I mean, we were building the light rail, and Silicon Beach was, in
Yeah,
full development. I mean, about the time you were getting involved, I was making the case, pre-COVID. I said that I thought that the Jefferson corridor, which you were on the eastern part of that corridor, and on the western edge is where Facebook and the sort of new Silicon Beach is, near Playa Vista. I was making the case to investors that this was the most dynamic and relevant, apartment market on the face of the earth,
yeah,
because we were talking about a sort of a quasi blue collar communities that were getting a Silicon Valley overlay. And when you throw the economic growth that is being generated by that moment in history, in the backdrop of the, like, what is it? What are we, the sixth largest economy in the world?
yeah,
We're bigger than Italy and most European countries, just LA County. Um, that it just was sort of like the rate of undervalue. You look at, at the time, buildings were trading at around $400 a square foot, 300, where mid city is. When you look at that and you compare that to other, world class cities. Now, while we're not as pretty as Paris, but our economic vitality is, pretty radical. And you look at our rents are still very approachable relative to, some of these other areas. And in the span of, like, what, 4 or 5 years, it just feels like the the regulatory environment has got everyone kind of scratching their head, wondering, where do we go from here? But to your point,
Yeah.
you're kind of like, I mean, is that the case then? Is the case saying, look, all of those things are still here? And policy changes, but the economic drivers that are here haven't actually left yet. Nothing's inherently different. It's just the attitude.
Yeah, we have the bones of being a world-class city. Like it's all there. It's all just ready and waiting. You're bringing back nostalgia. I remember 2018,
Right.
twenty
I
nineteen.
know.
You had Netflix you had Netflix going from 200,000 square feet to 2 million square feet in Hollywood, and in Playa Vista, you had, YouTube, Facebook, all these companies doubling and tripling year over year. And then you had them moving up into Culver and Jefferson. You kind of had this tech and media fusion. You think of like Amazon buying MGM, Amazon Studios in Culver City, and then the metro connecting the airport up to, Baldwin Hills and through up to West Adams. And you kind of just had Rams and Chargers moving to LA. You had SoFi Stadium being built. So you just had an incredible amount of momentum.
Right.
Um, and you had downtown revitalizing. You had Spotify moving there. Um, all of that is still there. We just
Right.
took a step back in COVID. Lockdowns were extremely strict relative to other states. And so that caused a huge chilling effect where you had a lot of people move, you had businesses move. Um, but a lot of these buildings in Playa Vista, they've gone back to banks. People have been foreclosed on, and everything kind of resets lower, which means asking rents on those buildings will be lower. And so, what typically happens in these cycles is businesses will see, oh wow, I can get back into Playa Vista at a much cheaper rental rate. And so
Right.
then you start to see the businesses come back. And then it's like a full, it was in Santa Monica, there was the mall there, that went through bankruptcy or foreclosure. And now, I was just there, and now you have starting to see new restaurants open
Oh, no
because
kidding.
the new owner is so much lower.
Right.
They can charge a lower rent and still make the same return. And so
Right.
a restaurant will say, okay, this is Santa Monica still, I'll take a chance.
Right.
And they can come in at a lower rent. And this is how cycles tend to work.
Right.
Um, and so, I think we're just at the bottom of the cycle. I think you're starting to see green shoots. Snapchat, they signed a 10-year lease. They're committed to Santa Monica. So there are green shoots coming out of a very tough period that we've had over the last 4 to 5 years.
Interesting. So that that would then suggest that this is these are there's actually this is a prime entry point for investors. And is that well tell me about your thesis moving forward right now. What are you working on? How are you what's your game plan?
Yeah, the one other thing I'll say is that, LA has become, it's a contrarian bet at this point. I used to be able to find potential deals that would generate, an average of a 10% return, annual return, say. And investors would say, oh, wow, that's great for a tier one city, 10% return. Let's do this transaction. Now, there's much more risk associated with the city. People have lost money, people are not sure where things are going. And so I need to present a deal. I need to find deals that generate a 20% annual return, kind of
Wow.
make up for that risk.
Right.
And so, my strategy is just to be very selective and very careful and find properties that generate, at least a 20% annual return. So that
Gross, or that's to your investors?
net to the investor.
Wow, so that's a pretty, you gotta make some money. Yeah,
Yeah, because there's risk that people that the city declines, or regulatory regulations get worse. So that's just where we are, and I believe that there is an opportunity here. I love Los Angeles, so I'm continuing to scour and try to find opportunities.
yeah, we're trying to make something happen. Hopefully we can make something happen. Um, so I think we've kind of talked about where the opportunities are, where the challenges. If you were to look at yourself, this is kind of like going back to like a little bit of 101 here for the guy who's watching this and is wanting to break into the business and wanting to raise some money and whatnot, and you know, find the success that you have found, whether it's in Los Angeles or somewhere else. What advice would you give to that person or to yourself, way back when you're getting things started?
Yeah, my advice would be, when you find a deal, and if you've executed your business plan,
Right.
you should sell after executing a business plan, because
Why?
your job is to execute a business plan, to find, as I said in the example before, find something for $1 million, make improvements for $500,000, and then make a profit for your investors. And once you've completed that business plan, you need to move on to the next project. And I think what often happens is you continue to hold, and at
Right.
that point you're taking market risk. You're taking risk that you can't control. Whereas, in the early stages of a business plan, you're controlling the value of the property by
Interesting.
how you are executing the
Right.
contracts that you get with general contractors, um, you know, hitting your leasing rates that you have projected.
Mhm.
Um, and so a lot of those things are in your control.
Right.
Once you stabilize, you're really not in control much anymore. I mean, you can have better operations on the margin, but if the market moves against you, you wipe out all of the work that you've done.
At least from
Now,
an equity standpoint.
yeah, now some investors will want to hold long term, and that's just your investor base. And if they want to do that, that's completely fine.
Mhm.
Um, but I guess my advice would be, just capture the value that you've added. Um, and then, if people want to stay invested, there's always the 1031 exchange. Um, hopefully you've built a machine, an acquisitions machine, that you can find the next deal.
Right.
You probably already have the next deal teed up.
Right.
You want to build a team around you that can hunt for deals and have the next opportunity so that people can stay invested. Um, yeah, that would be my advice to my younger self, and new new sponsors.
Interesting. Wise words. Anything from the standpoint, if we're just transitioning, success habits. Next week, I'm giving a presentation to a bunch of, younger brokers on habits of success. So any thoughts that you have for me with regard to habits that are hallmark of success in this business?
Yeah, I mean, I think being very focused, and doing, kind of if you're making phone calls, that's what you're doing. You need to block off time. I mean, that's more of like a kind of a broker piece of advice is,
Right,
blocking off time for phone calls. More from the sponsor side, um, is setting aside specific time where, you can work on underwriting, or you can work on the various aspects of the business. Um, on the sponsor side, it's also very much about sales because you are, presenting your opportunities to investors on a consistent basis. So, it's outreach to, potential investors. Um, and Yeah, I would say, blocking off time to really do the work on what neighborhoods you want to be in, the the specific property that you're buying,
mhm,
um, doing the underwriting and making sure you can hit the rents. You need to look at all the rent comps. You need to be very diligent, whenever you're making an acquisition on, um, you know, the rents that you can hit, the CapEx items,
right,
price that you're going in at relative to comps. And so you kind of need to just set aside time where you're not distracted and you can, because it's very analytical in a lot of ways.
right.
There is certainly gut feel to it, like knowing what a good investment is that you just acquire over time. Um, but you need to then check your gut feeling, um, by checking all the assumptions and then, creating an output for investors that's easily digestible. What are you paying? What is the cash flow that you're generating?
I think what you're, what, you know, I think what you're suggesting is that, you know, there are certain steps that you need to take. And when you're lining up what you do, you know, for a living, identifying what are those key steps and identifying what are the things that need to be done in order to know that you know what you know, rather than thinking that you know what you know, but actually, do I know what I know? Have I take, and then identifying is almost like a checklist where you're like, I have to know that I know all of these pieces, and that requires that I literally have that checkbox where it's like I've organized my time in such a manner that I've allocated enough time to understand what I haven't figured out, what I have figured out, and then just going through and doing the work. And that is a process that requires that you understand what your business plan is, what you are doing in the business, and what needs to be done in order to be protecting your investors. What it sounds like to me.
Yeah. An analogy I like is the jar. You have a jar and then you have, big rocks, medium-sized rocks, and small rocks. If you put
Right.
all the small rocks in, there's no room for the big one to go in.
Yeah.
So if you put the big rocks in the jar first, the jar is your time.
Right.
Uh, all the little rocks can fit in around it. And so when you think about your day, in your career, you want to go after the big things first. All the emails and the texts and all the little stuff, that kind of just fills its way in. Um, you often see some of the most successful people have an inbox with 15,000 unread emails. And it's like, wow, how are they so successful? It's because they just dive after the big things,
Right.
the big chunky things. And then kind of the small stuff, just let that fill in. But it's very hard for people because you kind of want to you're tempted to do the little stuff first.
Mm-hmm.
You're tempted to, just clean the house or, just kind
Yeah,
of do the
the
mindless,
big stuff's
easy.
hard because
Yeah.
there's no clear ending to it. And you know, following through on the process of taking a big idea to
Yeah.
fruition, that's no joke. Like there's a lot of opportunity to listen to that inner voice that tells you, you know, you've got no business doing this, and go, you know, go vacuum the living room. Right.
Yeah. Which is important too. But you know, it's a huge differentiator because 90% of people will just go through their day just doing little stuff.
Right.
And it'll take up their whole day, and they'll just do little stuff and they'll never tack. One strategy I have is I actually will just, I'll write the big things, especially at the beginning of the year, and I'll just tape it up to my computer.
Mhm.
Um, and you know, kind of the big goals, and you know, making sure I'm going after big boulders every day that actually address that goal.
Good advice, Austin. Anything, to sort of close up this conversation, is there anything that you would, that you lean on in terms of like how you organize your time to make your entire life meaningful?
Yeah, I mean, I everything that I'm doing, I'm building a business, you know, for my kids. You know, I want to have a business that is around after I'm gone. I want to build something that's truly sustainable. Um, and so, but you know, if you're not spending time with your kids, then you know, what's the point? And so I always block off, you know, typically like 4:30 to 7, and just, you know, actually spend time with my kids. And it requires hopping back on at night,
Yeah,
and you know, working at night, but you know, that's a sacrifice. And um, I think it's worth it. I think it's really important to have balance.
yeah,
Um, and so, you know, I having kids has really created meaning for the business for me personally. You know, why am I even doing this?
right,
Um, you know, it's to create something that lasts. Kids don't have to work in the business, but at least to have something that can be sustainable.
right,
You know, I'd love to be able to go on vacation, and you know, deals are still getting done. Investors are still being connected with cool real estate opportunities while I'm, you know, on vacation.
right,
That would, I mean, definitely not there now, you know,
right,
but I'm kind of just running everything.
right.
Um, I have some partners now, which is great.
Oh, yeah,
So I'm kind of getting there, but getting to the point of having, you know, a real business. For a very long time, I was just a, you know, kind of a one man band,
right,
um, where everything was running through me. But that, you know, that's unsustainable, and that, you know, that won't last. That's not something that really lasts. I want to build a real world class organization.
right.
So,
Fantastic, wonderful. Well, I think that brings us to a nice closing spot. And Austin, I want to thank you for jumping on this with us, and let's do it again soon.
yeah, Scott, great connecting. Yeah, for sure. Thanks for having me on.
All right, very good, brother. Have a good day, and I'll find. I'm gonna go hunt for the next deal for you, man.
Appreciate it. We'll
Cheers.
get something done.